Hey folks, Chris Hobart here, the Wealthologist. Now, if you've seen the headlines lately, you might be thinking we're all rolling in riches. The Federal Reserve just reported that US household net worth hit a record 176 trillion in the second quarter of 2025. That is up 4.2% just from Q1 and 6.1% from a year ago. Uh, Sounds pretty amazing, right? But let's unpack what that really means because these numbers they're not necessarily telling the whole story. All right, let's break this down. The 176 trillion figure includes everything: stocks, real estate, business equity, retirement accounts, you name it. Now, in just one quarter, corporate equities jumped 3.7 trillion. Real estate rose by 1.2 trillion. Liabilities only up by 183 billion. So yes, on paper, Americans are richer than ever. But that wealth is highly concentrated in things like stock and homes, which don't exactly help if you're trying to pay for your rising grocery bill, right? Here's where it gets a little bit interesting: the leverage ratio. That's liabilities compared to assets. It dropped to just 10.6%. That's the lowest it's been since the 1960s. Translation? Well, on average, households are using less debt relative to their total assets. Compare that to 2009 during the housing crisis when leverage peaked at 19.5%. Now, that sounds good, right? But averages, they can be a bit deceiving. You see, this number is being dragged down by wealthy households whose asset values skyrocketed, while lower income families are still feeling the pinch. Uh, Now, all of this or a lot of this revolves around real estate. So let's talk real estate, right? Since 2019, real estate values are up 65%. But residential mortgage debt, it's only up 30%. That means homeowners have more equity than ever before. 72.6% of their home value to be exact. Now, that's the highest since 1958. But here's the twist: home values have surged partly because supply is tight and money was cheap. With rate cuts back on the table, we could see housing prices climb again. Now, that is great if you own, but if you are trying to buy, not so great. And remember, housing wealth only helps if you sell or if you borrow against it. So, is this 2006 all over again? Not quite. See, back then, people were borrowing 100% of home value, sometimes more. And today, people have real equity. But here's the danger: if we confuse asset growth with spending power, we will repeat the same mistakes. You see, paper wealth can disappear real fast, especially in markets as volatile as real estate and stocks. Remember 2022? Trillions in equity wiped out in weeks. And quite frankly, it can happen again. So, if you're trying to figure out whether this wealth boom means anything for you, here is what I think you should be tracking. First, what is your own debt to asset ratio? How exposed are you if things go sideways? Second, what's your home equity? Not just the value, but how accessible is it? Uh, Third, market concentration. If most of your wealth is tied up in stocks or a single home, you might want to diversify. And number four, real life liquidity. Can you actually spend your wealth without selling key assets? So let's get real here. 176 trillion, it sounds really impressive, but that doesn't mean your wallet feels heavier. Wealth isn't just what's on paper, it's how secure you feel, how resilient you are in a crisis, and whether your assets are actually working for you. So instead of asking, how rich is America, we probably need to ask, how financially resilient am I? And I think that's a question that matters the most. So here's your checklist for the week: know your real net worth, not just your asset value. Review your equity versus debt mix, especially with housing. Focus on liquidity and flexibility. Don't chase the numbers, chase resilience. Question for you: do you feel better off today than you did 5 years ago, even with this supposed wealth boom? Drop your comments and your thoughts in the section below because I'd love to hear how these headlines are landing with real people. And hey, if this helped you maybe cut through some of the hype, hit that like button, subscribe, and share this with someone who thinks that 176 trillion is all sunshine and rainbows. All right, folks, I'm Chris Hobart, the Wealthologist. We'll see you next week.